2010, I met Fausto Pugliese, the CEO of Cyber Trading University. And really, it was an amazing day that I met him because it really changed my life. I wanted to get back into the market, and this was great. Except I have 2 kids at home, and there's a bus at 2:30 that comes. So how are you gonna, leave your job at 2:30 to get your kids off the bus? Well, he told me he had an online university and a cyber chat room. I said, I definitely want to do that. This is something I can do. And be home for my children. And I know a lot of you are mothers, fathers, and want to be home for your kids too. So it really is a great career that you can do from your house. I started as a swing trader instructor, teaching swing classes. But, Fausto's a day trader. And we used to laugh at the day traders because we used to make points. And the day traders, they were called the So's bandits. I mean, they were making, pennies. And I'm not laughing anymore. I'm going to tell you guys that I love to day trade now, except I needed to find a way to pinpoint the highest probability trades. How can you make 20 cents off of a major level? Where is the high probability trade? I knew with swing trading, it had to do with momentum and volume at the end of the day. That's how we would pick our stocks. Stocks that traded greater volume at the end of the day, closing strong, we would go long, and stocks that closed weak at the end of the day, on above average volume, we would go short. So when I got into day trading, I said, okay, where's the volume in this trade? And that's what I'm going to be showing you today. Now, how many of you play cards? Poker, blackjack, bridge? Everybody plays cards, right? How can you gain an advantage over your opponents? Counting cards, right? That's the highest odds that you can get. What happens to those guys when they go into a casino? Well, they get kicked out, right? Professional gamblers are card counters. They play on the highest odds to win. Now, playing cards and playing the market are a lot alike, and I'm going to be showing you that today. In poker, when you bluff, well, that's refreshing on our ECN book. It's the same thing as bluffing. And when in poker you fold, right, you know your hand's not good, and you're not going to keep playing and putting more money into the pot, so you fold, and that's the same exact thing as having a stop loss. Now, when you count the cards, well, we count the prints. Same thing as reading the tape. Now in blackjack, counting the cards and sticking or hitting, that is knowing your odds. And in bridge, you can count the cards to gain an advantage over your opponents, right? Now, card counters get kicked out of the casino, right? Well, they can't kick us out of this casino, and I'm going to teach you how to trade like a market maker. I can teach you how to be a professional trader, trading only on the highest probability trades, and trading off the big prints. And that's what I call counting the cards of Wall Street. They're not going to kick us out, but they're going to hide prints from us. We saw that today. Now, what are the prints? Well, every single transaction, every buy, every sell is printed in this time and sales right here. Here's the price. Here's the share. Now, you just have to add 2 zeros to my time and sales. So this 2 is 200. This 5 is 500. 10 is 10,000. Now, look at this print down here. That's a big print, right? 46,600. And it's in yellow. Why do I color code my time and sales window? So I can see those big yellow prints and those big orange prints. I color code my time and sales 4 different colors. Now most people only have 2. At the ask, which is green or blue sometimes, right? And at the bid, which is red. But I'm going to tell you that color, if you're able to color code above the ask, which I have orange, and below the bid, which I have yellow, you're going to see prints that you wouldn't normally see, especially when your time and sales window is going really fast. A lot of the times, out of the corner of my eye, I see a big yellow print or a big orange print, and I'm able to get my next great trade. Now, market makers are going to sell at the top, right? And they're going to buy at the bottom. So that's why we want to be able to see all the different colors. I'm going to show you lots of examples. Now, who were the best traders? And notice past tense. Right? Recognize this guy? Mr. Buffett, Goldman Sachs, definitely the best market makers out there, right? And George Soros. Great traders, right? The old Wall Street. When I first started 20 years ago, this is what the floor looked like. I mean, there were tons of market makers, traders. Look at the paper on the floor. I love that. And every time we had to do a trade, I had to write a ticket. And I'm going to tell you, from 4 to 4:30, you know what I was doing every day? I was writing my tickets. Lots of tickets. Well, the new Wall Street. This is what the floor looks like today. There's one guy here, probably a reporter. I don't know, maybe I see two. A couple people, right? Who are the best traders right now? We're trading against high-frequency computers. And this is what I call smart money, right? We have smartphones, we have smart cars. Well, this is smart money. Let's follow the smart money. Smart money buys at the bottom. Smart money sells at the top. What levels do they buy at? What levels do they sell at? And where are we going to find these levels, otherwise called increments? Zooming out on your chart, it's going to give you the strongest levels to trade off of. Now let's take a look at the Dow Jones Industrial Average. 500 increments, which are on the right-hand side of the chart. And you can see here, if it's small on your page, just right-click on your mouse and you can magnify your screen so you can get a better picture, or if you got a pair of binoculars on your desk. Now you can see 15,500, then there's 15,000, 14,500, 14, all right? These are the strongest swing increments to trade off of. So the smartest money is going to buy here, right? They're going to buy here. They're going to sell up here. I have a 5-day 500 increment pattern that I have been watching. Now this pattern states that the Dow Jones Industrial Average has to close over the 500 increment level for 5 consecutive days to be considered a good support level. Now the odds of it moving up to the next 500 increment increase significantly when this happens. Now I want you to keep in mind that with this pattern and with all patterns, it's not 100%, but it's been very accurate lately. Let me show you some slides. Right here, which just happened recently, we hit that 15,500 level. And you can see we did not close above it. Instead, you could see from the wick of the candle, the sellers came in. You can see from the volume right down here also, the sellers came in. And again. So this is how I knew not to go long. In fact, I put some shorts on. I shorted Google. I shorted a couple things, which were good. But if we stayed above that 500 for 5 days, I would have been going long. Now let's look back at the last 500 increment. When the Dow Jones hit 15,000 right here, did it stay above for 5 days? Yeah, look. It hit it, backed off, closed 1, 2, 3, 4, 5. And look what happened. We went right up to the next level. Let's look at the time before. 14,500, right? We hit it. Look what happened. We did not stay above it yet. We backed down. We consolidated, and then we started to move up. Now, what this shows me is that the buyers held it up. Some sellers came in, but the buyers continued to hold the market up. The funds kept pouring more money into the stock market. And you can see 5 days, 1, 2, 3, 4, 5, and then we moved up to the next level. And we never closed below that 14,500 level. And you can see we dipped a couple of days, but the swing trader in me always marks the close. And we never closed below that. Now look what happened when the Dow Jones hit 14,000. Came up here, had a rounded top, but look what it did. It moved up, and when it does this, it forms that V shape, right, around the level, and it's telling you that there are more buyers than sellers. And 1, 2, 3, 4, 5. Now, zooming in a little bit will give us the second strongest levels on the Dow, the 200 increments. And you can see on the right side of the chart, I don't make this up, the computers do it all for me. 15,400, 200, 15,000, 14,800. They go by 200. And you can see right here was a nice top on the 13,600 level. Here was a nice bottom support at the 800. Here was a top at the 200, top at the 800. They're all at 200 increments. These are great levels to swing overnight. Now, if I zoom in more, we're going to find the third strongest levels. These are the 100 increment levels. You can see on the right side of the chart, and these are great for day trading and overnight swinging. The fourth strongest levels, which I like for day trading, are the 50 increments. And you can see them on the right side of the chart. Now, why am I showing you these levels on the Dow? Because I'm going to tell you that these levels and the way I find them are how I find levels on every stock, every ETF. It's the same process. When you zoom out, you are going to find the strongest levels. Now, as a day trader, the odds of you making money on your day trade increase significantly when you trade off of the strong levels, the 500s, all right, the 200s, even the 100s. Now, you can make money on the 50s, but the odds of you making a successful trade, whether you're going long or short, are going to be off the strongest levels. Now let's take out our pre-market worksheets just to show you how to find the best levels for today. It's okay if you don't have it right now. I'm going to walk through it with you and I'll give it to you after class. But let me just escape because let's find the Dow levels today. Let me get up. Okay, so here's the Dow for today. And look, isn't it shocking that we bounced off of the 100 level, right? The market came down this morning, the Dow. Now, it's always going to go a little bit below it. That doesn't mean it's breaking it. In fact, it went a little bit below it, right? It bounced up, and then it came and retested it right here on the 100. And it held it, and that's why we moved up. Once we retested, the buyers came in here and pushed it up. Now, later on today, we may pull up to the 200. We'll see. That's resistance, right? The next strongest level. Or if we come down, Lori lost audio. Does everybody hear me? Yes? Okay, excellent. Yeah, if you lose audio, definitely put it into the chat room as soon as possible, and we'll correct it. Now, if we bounce down to the 100 again and break through it down, where are we going? What level are we going to most likely test? Can anybody tell me? 15,000, correct. Now, as a day trader, when we're breaking through this level, if we break through it later, it looks like we might be forming around the top here too. But when we break through it, if you find a stock to short that correlates with the Dow, the odds of you making money on that trade are going to increase significantly. So this is why I watch the Dow. Now, if you're trading the NASDAQ, let's put the chart up so slow. There we go. If you're trading the NASDAQ, and the same thing happens with the NASDAQ levels. See the low, 34.25. So let's look, see? There's the 25 increments. And isn't that shocking? Look, it went right down to the 33. Now, the NASDAQ trades really well off the 25 increments, as you can see. So 25, 50, 100, and so forth. See the low here is 3,400. So the fact that the low of the day is right at the 34.25 doesn't surprise me. Now, why didn't it hit 34.25? Well, a lot of people don't like to get stuck in a traffic jam. So if you're looking to buy on a dip, you're going to try to cut the guy off at 34.25 and buy it at 34.26, right? That's why a lot of times you see it come really close and then take a bounce up. All right, so that's the NASDAQ levels. And in the morning, I like to check the S&P 500. Now, what levels is this trading off of today? Well, kind of looks like the $12.50 increments. So you have right here, 16.25. It went a little bit below it, but like I said, the 16.25 is the one to watch today. If we break down through that later, that'll be a good shorting opportunity. So in the morning, I like to fill out my worksheets depending on what I'm trading. I have some gold. If you're going to trade a gold stock, then you want to check out the XAU and check out those levels, right? You can see the XAU, the 100, the 105. This thing trades perfectly on the $5 increments. Right now, we broke. See how it came up? We're below 105. So if we broke above 105, then we would look to find a gold stock to go long. But going down, we're going to look to find a gold stock going short. Now, if we break the 100, the next big level down, see how I'm zooming out on my chart, is 80. The swing trader and me will look to get in on 80, but on the way up. If I miss 80, and then we end up going up through the 100 again, that's going to be another great entry on the way up. But let's say you want to trade Yamana today. Let's see what that's doing. So you want to short it. Well, the best spot to short Yamana would be, you can see the increments on the right side of the chart, right? 50 cents, 11. On the way down, you never want to short on the way up, because look at what happened. They would have shaken you out. Now, the market always looks like a roller coaster. There are rounded tops. There are rounded bottoms. This is around. You always want to get in on the way down through 11, especially if the XAU is weak below its level of 104, 105. The next, maybe 102.50 we'll be looking to watch as well. All right, so that's pretty much how I fill out my sheet. If we're going to trade financials, I'm going to look at the XLF index and look at the different increments on that. So let's just take a look at that quickly. Now, the XLF, we were watching the 20 level yesterday. That's the biggest level. Let's go out. See that? The 50-cent increments are the strongest on this. So that's why 20 was such a big number yesterday. The fact that we closed below 20 sent a sell signal to the computers who we're trading against, and they sold. Now, I saw a late print this morning. I'm going to answer your question in a second, Dennis. I saw a late print this morning on XLF from yesterday. Let me show you this, because this was really exciting to see. See this? 1998. This isn't from today. This stock didn't trade there today. This was a late, I'm going to go into the dark pool prints, but this is a late sell print from yesterday that they didn't show us until today. Yesterday felt really weird. Why isn't the market going up? But I didn't, it's not going down. I didn't see any big prints. Well, guess what? This morning We got to see a lot of big prints from yesterday, so it doesn't shock me. It's right below the 20. Now, with the smaller stocks, they're going to have a lot of the same levels. For instance, Bank of America, when you go out of it, those are the big, now I see I zoomed out as much as I can, and these are the absolute strongest, and you can see it came down to 5 and bounced up. And did we go to 15? Oh, we didn't hit 15. Couldn't make it up there yet. We'll see. But 15 is a big resistance. Now, when I zoom in, there's the 50 cents. Let's zoom in more. There's the 25-cent increments. Now, with the less inexpensive stocks, Dennis, you'll look to make, as a day trader, 10 cents on this. As a swing trader, I look to make 20 cents on it. Whereas a more expensive stock, like JP Morgan, let's just say, let's put that up for a second, I would look to make at least 20 on a day trade and 50 cents on a swing trade. But with Bank of America, I would take twice as many shares. So I would take 500 of Bank of America, and if I traded JP Morgan, I would take about 100 to 200, depending. It's getting more expensive now. It used to be a little bit less expensive. But back to Bank of America, when I zoom in even more, you have 20-cent increments, see these? And let's see if I have 12.5. There's the 12.5 cents, which you can trade off as well. Now, what increments is JP Morgan, is Bank of America trading off of today? Anybody can tell? Are they trading off the 20s right here, or are they trading off of the 25-cent increments? Kind of hard to tell, though, right? Jake, it's a trick question. Yes, I know, I always give you. Yeah, you're both right. You know why you can't tell? Because it went a little bit above the 20, and it went a little bit below the 25. So it's a little bit hard to tell, but I'd guess the 20 if I had to take a guess. And right now we are at the 20. And it's showing resistance, but yep, looks like the 20. A lot of times we see really good clues in pre-market activity. It will tell us, because sometimes it's like, I don't know, is it the 20 or the 25? But you see the stock went up to resistance at 25 pre-market. That's the best clue that you can get in the morning, because then you know I'm going to trade Bank of America around the 25-cent increments, and that's always a great entry exit spot to take. So that's why when I'm a day trader, I only like to trade stocks that have great pre-market activity, because that gives us all the clues. So this is a pre-market sheet. I don't fill it out entirely every single morning. It depends on what I'm looking to trade for the day. So I'm looking to trade financials, I'm going to fill out the XLF and the FOS. If I'm looking to trade a silver stock, I'm going to want to know the levels on SLV. Oil, USO. Now the red is the bear ETFs. They were designed so that you can short financials in your IRA portfolio by buying FAZ, or by buying ZSL to short XLF for the financials, and gold, GLL, and so forth. Now, what else do I have in my charts that serve as levels? Well, moving averages. They are magnets and they're rubber bands. Now, they're magnets because they get stuck to it. You know, when there's a moving average there, the market makers, the computers will push it up to where that moving average is. It'll touch it and it'll bounce right off of it like a rubber band. And I'm going to show you some examples, but these are my favorites. On my daily chart, the simple moving averages that I use are the 20, 50, 100, 200, 250, and then I have my earnings moving averages, 30, 90, and 180. And I keep these on my chart at all times. Even though they're very popular during earnings season, they still work all year around. Now on my 5-minute chart, I keep up the 20, the 50, and the 200. And there's one more I'm going to be telling you about in just a minute. Let's see, Dennis has a question. There's a list of 20 most active stocks. Which stock would you decide to trade in the morning? Based on volume or price? Well, both, Dennis. It's based on the prints, which I'm going to be showing you in just a moment. Now, here's a picture of EWY. Now, notice the low of the day, $58.91. Now you see this neon green right here? That's the 180 SMA, and this stock went right down to it and bounced off of it. Here's another chart, Dow Jones Transports. Now here's a 5-minute, and here's a day chart. Now you can see right here, this blue moving average is the 50. And the Dow Jones Transports fell all the way down to it and bounced off of it. And you could see the bounce on the 5-minute chart. In fact, it bounced up to the 20, the simple 20 on my 5-minute. So they just love to bounce off of each other. Here's another one. Goldman Sachs rallied up to the 200 SMA on this 5-minute chart, but before it did that, it bounced off of the 90 SMA on my day chart right here in purple. And you can see it bounced. And where did it go? Right up to the 200. Now the 200 is the strongest on the 5-minute. So when there's a big movement in a stock, most of the time it's going to go right up to the 200, and that's where the sellers are sitting, and it's going to bounce down. Yes, everybody please use all participants on your questions. Send to all participants so everybody could see it. But I do, read them out loud, but it's helpful if we see the questions. Because we all learn from each other's questions too. Now TZA, here's another example. Popped all the way right here on the day chart to the 50, 4107, and then retreated. Now, I have a million pictures of this, and I can go on all day. I don't think I need to show you a million, right? But I want you to put them into your chart, and I want you to see how every single day these stocks, they magnetize towards them, and then they bounce right off of them like a rubber band. Now, my favorite EMA is the 8 EMA moving average, otherwise known as the T-line or the A train. The 8 EMA line acts like a magnet or a slingshot. When the price moves away from it, either up or down, it almost always comes right back to that T-line. I'm bullish above it, and I'm bearish below it, and I love it on every single chart that I have. Let me just show you an example here. Here's a 5-minute chart, which is great for day trading. Here's the black line is the 8. As a day trader, you want to go long, all right, as soon as it closes the 5-minute bar above the 8 and stay in it. But you can see how far away it moved from the 8 here. When it moves like a certain percentage away from the 8, it likes to retrace back to it. And then it bounced up again and moved back to it. As soon as it closes below it, as you can see right here, that's a bearish signal. And you can see it went down, 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 and then it bounced up again above the 8, closed above it, and continued to move higher, moved far away, came back down to it, right, broke down. A lot of day traders trade strictly off of this 8. Now, the swing trader in me loves it. Okay, I just love it on this chart. Look at this chart of Caterpillar. If you were long Caterpillar, as soon as it broke it right here, look at this. Ride the A train all the way down pretty much. And this tells me it's bearish. I don't like to swing long until I see the stock closing above the 8 on good volume. It's a big rule of mine. Now here's my level 2. Everybody recognizes this. It's a little bit blurry. I apologize for that. Years ago, this was filled with market makers. Goldman Sachs, Morgan Stanley, Cantor Fitzgerald, HSBC, Jefferies, JP Morgan, Madoff, believe it or not, I used to trade against him, Merrill Lynch, Knight, Smith Barney. Where did they go? Do you see them here? I don't see them there anymore. Where'd they go? Anybody know? To the ECNs. That's right. It was so easy. That's very funny, Keith. Years ago, Keith, it was so easy to be a trader. I would see Goldman Sachs over here with a big, big, big size, and I would go long. Or if I was thinking of shorting a stock and I pulled it up and I saw him on the bid, there was no way I was going against the big guy. That's what we called him. There's the big guy. If he was on the offer with big size, there was no way I was going to buy the stock from him. I don't want to trade against him. He was the best trader. There's no way I was taking the other side of the bet with him. He knew a lot more information than I did. So instead, I traded alongside with him. I shorted it. It was so easy to make money back then. But they got smart, and they realized that if we could see what they're doing, they're not going to be able to do what they want to do. Now, how many of you do not trade with an ECN book? Oh, that's good. I'm glad to see that. Oh, Keith? Okay, well, Keith, after I'm done with this, I think you'll change your mind. Let's see, Ricky heard something interesting over the weekend. When you're in the trade and you're not quite sure what to do, which should never happen because you should know going in, but ask yourself, what would Goldman Sachs do? Yep, I do that every day. Or I look on my ECN book and I see where is Goldman Sachs, right? Now, when I first started trading, we didn't have this ECN NASDAQ book viewer, but I had an Instinet machine. It glowed green. We called it the green machine. Not only because it glowed green, but it made us money every day. And anytime I wanted to get a short off, it was so easy. I just go a 16th above the bid because we had the uptick rule. So you just go in a 16th above it, and you'd cut the line, and you'd most likely get your short off. But that was where all the big orders were. Or it was designed to bring competition to the marketplace. I guess they saw that it wasn't equal, right? The marketplace. I mean, it really isn't. It's not equal right now, but this definitely helped. But I'm saying that it was great for Goldman Sachs and Morgan Stanley because this is where they hid their big orders. There were more and more So's bandits, and everybody had a level 2. That was the big thing. But not too many people had an Internet machine. And not too many people have an ECN book, except those that have taken my classes have realized, you know what, I'm going to get an ECN book. Now note, 7,500 shares. Now it looks just like a level 2, right? You have the sell orders here and the buy orders, same exact thing. Except if you were going to buy a stock off of here, you'd have to buy it at $26.94 at the market, unless you put your order over here. But if you're going to buy it at the market, this guy is going to sell it to you. Now, 200, 200, 200, 500, 100. Oh, look at this. 7,500 shares at $27.49. Now, we know the levels on Microsoft are 50 cents. So a big support level, a big resistance is $27.50. So it doesn't shock me to see that somebody wants to sell most of their shares at resistance. Now, if you're not sure of where resistance is on your stock that you're trading, I want you to pull up the ECN book and look to see where the big size orders are. All right, and you can see here, it's right here. This only confirms levels, which is great. Dennis is saying, do you need a level 2 anymore if you have the ECN book? Yeah, because the ECN book doesn't do time and sales. I need time and sales. And not even that, on the level 2, I could see the EdgeX book, the ARCA, and the NASDAQ. Lori's saying, how do you know they are not fake? Well, when the stock comes in, now the market maker's job is to bring the stock to where the orders are. So if he sees somebody big selling it over here, he's going to bring it up on as little shares as possible to the seller. A lot of times we see the seller leave and run away. It happens. Or we see the seller stay and refresh. Or we see the seller get done and the market and it moves up. So there are 3 different scenarios that happen. Now, I don't trade around this guy, Lori. I like to see the guys there, but my eyes are always on the top level because this is what is trading right now. And I'm going to go into that in a little while. Now, how does Warren Buffett sell 100 shares of stock at the high of the day without moving the stock down? And how does he buy 100,000 shares of the stock without moving it up? Well, let's look at that ECN book again. All right. ECN refreshing. Now, that's what I was telling you about, the top level. Now, if there was a big offer at $26.94, would you buy stock there? If there was 7,500 shares over here, would you want to buy the stock? No, right? There's a big seller. But, Dennis and Keith, there's 200. So right now I'm thinking, oh, you know what? I could probably make a quick 6 cents, maybe, right? Buy it here, sell it here. I'll be a piker, be a little so's bandit. So I buy the stock at $26.94, 200 shares. But you know what happens? He gets taken out and 1,000 more shares appears. And they go, all right, let me buy 1,000 shares and take him out. So I buy 1,000 shares, and then another 1,000 shares appears. And I go, well, all right, let me buy another 1,000 shares. So I buy another 1,000 shares, and another 1,000 shares appear, and so on, and so on. And that's how Warren Buffett sells 100,000 shares of the stock at $26.94 without moving the stock down. Refreshing. He refreshes the offer. Now, let's just say he wanted to buy 100,000 shares without moving it up. So there's 400 shares here, right? Let's say he gets taken out. You sell it to him, and then another 400 appears. And then you sell another 400, and then 1,000 appears. And you sell another. You sell 1,000, another 1,000 appears, and so on, and so on. Before you know it, he just bought 100,000 shares of the stock without moving it up. Now, that's refreshing, and that's bluffing. That's the same thing as when you're playing poker. You don't want to show them you have 4 aces. You only show them 1. It's the same thing. So if he put 100,000 shares here he wanted to buy, you know what would happen to the stock? Everybody would buy it over here, move it up, and he never got done. And that's exactly how they do it. And I'm going to show you in time and sales coming up in a little while how that happens in action. All right, so now we know how to find the best levels of support and resistance along with the best moving averages and ECN refreshing techniques. Let's follow the big prints. And I have a ton of slides on this to show you. During my 9:15 morning meeting in our online cyber trading chat room, I spotted a 1 million share print on EWJ. I got really excited. But Bruno, one of my students, he took a picture of his screen to show me that there were a lot more shares at 1,000,000. You see these? Now his colors are a little bit different. So the stock was trading between 93 and 95. So these are below the bid. And you can tell the fact that 1,000,000, 1,000,000, 1,000,000 got done and the stock proceeded to move higher was a clue that this was buying at the bottom. Now you could see the stock was down 12 cents, but moving up from these buy prints. So what is the trade on EWJ? Where should we enter? Where should we put our stop loss? Now, the big hint is you want to put your sell stop below the big prints. So let's go there. Here's where the prints happened. The stock never traded below the prints. So we'd want to buy it anywhere above 90, 91, 92. You could have gotten in very easily. Came down to where those big prints were, bounced off of it. You want to buy on the way up and put your sell stop at 87, 86, even 85. You want to maybe give it a couple more room. I mean, it was, millions of shares. And look how the stock went up all day and closed really strong. This was a great swing as well overnight into the next day, 11:20. It trades on 20-cent increments. And there's where you want to put your target and get out. Now, as a swing trader, I like to get out, and then when it pulls back, if it were to break up again through the 11:20, then I would take a day trade on it. But that was definitely a great trade. Now, my favorite swing pick this year was Fundamentals. Great growth story on LO. They make the electronic cigarettes, and if you haven't heard about them, it's everywhere now. When I first did my class, we didn't see anything. I mean, nobody in the class said they saw anybody smoking them. There was no commercials, and now it's everywhere. It was even on CNBC the other day. They were talking about it. Fundamentals, it was a great story. The technicals looked really good. Volume is everything. Now, let's see the prints on this. Now, when I first put the buy rating on LO, it was down at the 38 level, and we had a really nice pop-up. I got out of my first swing, came down again to that 38 level, and this is what we saw. These huge prints, 600,000, over 600, actually 69, 6 million, sorry. Yeah, 6 million. Oh, I put the wrong number there. 6,900,000. Now I want you to take a look at the exchange, ATTN. This is an ECN book where all the big players like to place their order. Every time we see big prints, it's on the ATTN. Now they do have small prints, but the big prints are always there. So $38.20. Now, when we saw this in the morning, we did not know if we should go long or we should go short because it was flat on the day. So I'm always going to be bullish above it and bearish below it. But being that the stock came down, being that it came down here, remember what I said, smart money likes to buy at the bottom and sell at the top? So I was definitely gearing, unless there was some big news story coming out, but definitely gearing to go long. When you see big money come in at a big level, definitely want to do that. Is ATTN what we are viewing on our book viewer? Now, the book viewer is the NSDQ that you see right here, the NASDAQ. This is a separate ECN book, Lori, that we don't have access to. I've tried, but it's all right. We don't really need to know so much information. The only thing I want you to pay attention to is the big prints that appear there and trade around those every single day. Now, how should we set up our trade for the day on low? Look to enter as close to the print as possible. Always buying on the way up, and I want you to put your stop loss below the print. Now, low trades really well off the 20-cent increments. Let's map out the trades. And you can see right here, 20 to 40, 40 to 60, 60 to 80, 80 to 100, right? Now it also trades on the 25-cent increments, 25 to 50, 50 to 75, 75 to $1. However, those big prints were on the 20. So that is the clue that we need to trade low today off the 20-cent increments. Let's see what happens. At 10:30 in the morning, so here the print happened. It moved up right at the open to 38.60, or right before it, and came down. Now I was prepared to buy it if it broke above the 60, but it did not. Instead, it moved down and down and down, and look where it went. $38.20. Look at the low of the day. $38.20. Is that a coincidence that the 6.9 million share print that we saw before the market opened occurred at the low of the day? Nothing is a coincidence. There was somebody big buying it there, and that guy is still buying it. So where are we going to trade this stock? Where are we going to trade this stock? We're going to buy it on the way up through 38.20. Now, a very popular day trading pattern is for stocks to retest their pre-market levels. Take a look at what happens next. Here's a 38.20, and look, we're moving up, and my target is 38.60. And look where it went. It went a little bit above it and pulled back again. You have to trust your levels as a day trader. And I'm going to show you hundreds of examples today so you can gain confidence in them and trust them. Now, are there going to be times where it goes to the level and then keeps going? Yes. But you can always get back into a trade, and it's always best to have your trade mapped out with a target. Now, Sean is asking me, does the book viewer show the ATTN? No, it does not. Those trades are done on a separate ECN book. All right, so let's move on to the next. Now, low trades with Mo. On the same exact day that we saw those low prints, March 5th, we also saw some really nice prints on Mo. So somebody was definitely buying the tobacco stocks that day. Look at these. 8 million, 8.5 actually, at $33.93. Now notice it's on ATTN again, and before the market opens. Where should we enter on this trade? Can anybody tell me? To go long? Or to go short? 34. Very good, Mike. You can enter, well, when it breaks 34, but I'm going to also give you permission, Mike, to enter above the print. So even though normally I would want you to get in above the major level 34, this guy pretty much told us this is going to be a major level today. So you can get in at $33.94, and then you can sell if it breaks down below that, giving yourself 3 or 4 cents, or you can wait for it to break through the 34 level and get in there. It depends. Sometimes you will see this print and the stock will move up before the market opens, and we won't get a chance to get in here. But if it breaks the 34, you know there's a big buyer on this stock, and there's definitely a lot more room to go up. Now look what happened for the day. See the low of the day? We didn't get a chance to buy it at 93. It opened up at 34.02. Actually, it opened up, came down to 34.02 and got in there, but never broke the 34 level, and was an amazing, amazing trade. Now, here's another print on Mo on April 24th, 5 million. Now, it's in white right here, also ATTN. And it's at a major level, 34.50, right around that level. And I love it when those prints happen around that level because it's easy to trade them. But I didn't know if it was a buy or a sell because it was flat on the day. But it moved up. But look what it did 4 days ago. That's where the print was. See, April 24th? Look what the stock did the next couple days. The swing trader in me loves when I see these big prints in the morning and when they close strong. All right, above the 8, it had everything going for it. Lori is asking, if you see a big print or a stock hitting a major level, do you enter pre-market? I have, Lori. Absolutely. That's the only time that I would enter, but I want you to be very careful if you do that. Do not buy at the market because there is no market before that opens. Before the market opens, there is, so that you could, if you buy at the market, you can get filled at 38, even though it's only trading at 36. So you have to put a limit price in. Now, normally, though, before I move on, normally, Lori, I'm going to tell you to wait 10 to 15 minutes before you day trade. But my rule is, if you see those big prints and the stock starts to move above it in the morning, you can most certainly get into that stock. Now, on May 14th, we saw some more big prints on both low and Mo pre-market. Check these out. This was fairly recent. May 14th, we saw 2 million. And you can see they're kind of getting smaller, right? Not as big as a 6 million. And Mo, we saw 3 million. And notice they're all ATTN. Where should we enter? 36.92. Same exact thing, right? Bullish above it at 93 or perhaps 37 or shorting it below it. Exactly. Well, guess what? Never traded below. This is where the print was. Moved up, came down, retested, but never went below it and broke up. Here's a daily chart on Mo and continued to rise. And look at the volume here. This is waxing volume. Every day, more and more buyers came in, pushing the stock up. Let's follow some more prints. ING. Now this is recent. This just happened June 4th, a couple days ago. You guys trade ING? I took this trade on. I don't know if you remember in the chat room. 1.4 million shares. I liked it because we don't normally see big prints early in the morning on this stock. And here they were, ATTN, and a lot. Right, 1.4 million. And $9.38. Now, it's up on the day, 8 cents. I want to go long. Do I want to go short? Well, where do you put your buy stop? If you're going to short this stock, anybody tell me where you're going to put your buy stop, the loss, if it goes up against you? Oh, good, Dennis. Just raise it up a penny because 40 is going to be resistance. So you want it to break resistance. At 41, let's see the closest increment. Now you can see on the right side of the chart here, this stock trades on the 20-cent increments, 960, 940, right? And the fact that that print was at 938, that's why I loved the trade, because I saw very little risk and big reward on this trade. Because I knew if I shorted it right near the 938, I was only going to risk 3 to 4 cents. And the next support was going to be at 920. So I was going to look to gain 17 cents or more, risking only 4 cents. That's why I really love the trade. Now look what happens. Here's my 5-minute chart. And 930 happened, and the big print was right here at 938. Never went above it. Now, I said to myself, if it's a buy print, this stock is going to go up and at least test the 940 level. When it did not do that, it came up and started to move down here, I shorted it. And then I shorted it. Then I saw this big print afterwards at 936. This is a late print because you could see it's trading 932 to 933. That they didn't want us to see, an ATTN, of course. And it was confirmation that this was a great short. Now, when I see this, I add to my position. Okay, it's confirmation. It's going my way. I see more and more sellers. I'm going to add, and I'm going to put my stop above 38. So I'm going to risk, not a lot. Now, look what happened to this. Here's where I shorted it. Moved down, moved up, never went above that. This is resistance, right? The 940. My stop loss is up here. Came down. Now, things don't go straight down. They like to go down, bounce up a little bit. Look where it bounced up to. The 200, right? Came down, took another little bounce up, came down, and here was my target, 920. Got out of half of my position, which I like to scale out. I felt that with those big prints that day, that this stock could have more room to go, but I wanted to take money off the table. That was my target. Now look what it did. It formed what I call a V shape around the 920 level. So if you drew a line right here, let's go like this. Oh, it's not there, right here. All right, that's the level. And I told you before, stocks like to go below. It doesn't mean it's breaking support. Don't get excited when it happens. They just like to overshoot a little bit. And then it's the bounce up. Okay, so when we bounced up and went above 920, I covered my second half at 922. And I said, if it comes back down to 920 and breaks again, I will re-short my stock. The fact that it was able to bounce up meant that there were buyers, short covers coming in, that this stock could move on up again. So really important to use the levels, and you can always get back in again. In fact, it did go down. It's a great short. Now, what is the next support level on ING based on the 20-cent increments? And I'll go back there. Can anybody tell me? 9, right. Mike, see, this is easy. Here's your confirmation, Mike. Look at this. Look at the high and the low of this past Friday on ING. 920 high, 9 low. Just got to love it, right? Now, where am I going long? If it breaks up through 920, where am I going short now? If it breaks below 9. And I'm just going to look and see where it's at today. Give me a sec. Oh, it's right at 920 right now. And you know what's crazy? The high of the day today, 923, and the low is 898. So it's still trading to 20-cent increments. Stocks like this, okay, they're so predictable. I will trade them every day that I can. Then there are stocks that are not predictable, that shake me out every time, like Qualcomm. I'm going to tell you, I will never trade that stock again. It doesn't trade perfectly on the levels. Most stocks do, some don't. They shake you. Don't trade them. All right, keep it simple. Trade stocks like ING every day. They're slow. Now, when we find million share prints in the morning, it's finding gold every single morning. I get really excited because, as you can see, we make a lot of money on them. Now, look at this one. This was a great swing. Check out 2.5 million share print on FXI. How do we trade this print? You see the print right here in orange? when I color code it, pops right out, ATTN, $36.54. And it's huge. It's not every day that we see this. Now you can see that it's on a downward trend, right? It's below the 8 on the day chart. So I'm thinking bearish, because you know why? There's a gap right here. And a lot of times they like to take it at least right down to where the gap is. So 35.60. This has a lot more room to go down. So I got really excited. So where do we short it? Well, we short it if it breaks the 36.50 level. It's really close to the 50 level. So I said, you know what, I'm going to wait. If it breaks the 50, which you could see it did right here, it's showing weakness. And you can see the 36.50 is on the offer. That's resistance. If the 36.50 is on the bid, it's support. But don't buy a stock until you see the 50 over here. Or don't short it until you see the 50 over here. Look what this stock did. How can I tell the average true range, Paul? Well, if you look at the high of the day and the low of the day on any candle, click on it, that's going to tell you the range. And you can pretty much see what a stock trades for in a day, which stocks are better by the length of the candles. But when you see those big prints, Paul, that's telling you that this stock is going to have a big range today. When a big seller comes in like that, it's going to definitely move. That's the volatility. That's the big wave. You know, we're trading in an ocean, and we want to get on the biggest wave that we can. Now, sometimes you miss the really big wave, like in earnings season, but we catch the medium-sized waves, which I'm going to tell you are phenomenal. So even if you missed the big one, there's plenty of opportunity to catch another wave down over here, okay, over here or over here. But being that we saw, and you could see the big spike here, volume, the 2.5 million share print, and it opened and started to move down below the 50. This is the spot to short it. Put your stop above it. And look at this ride. Ride the A train all the way down. Even if you got out of here. Now, I had two targets on this. I had 36 and 35.50, and they hit both. So this day I got out at 36, and then I think a couple days later it hit the 35.50 on the next day. But look at this ride down. It's phenomenal. Another print on low. As you can see, I mean, this stock gets a ton of big prints every morning. And it trades amazing on the levels. So I really love this stock. 3.5 million print at $43.21. How are you going to trade this print? This was the other day, by the way. The first thing I'm going to do is draw a line on the closest levels. So we had 43.20. We know that low trades on the 20-cent increments already. I showed you an example. Now, these increments never change unless the stock price significantly changes. So if low goes from a $40 stock to a $20 stock, yes, the increments can change, or from 40 to 60. But if it stays within this level, the increments are going to stay the same. So you begin to memorize them, and they're pretty much all the same. They don't, there's not too much of a difference. Some stocks trade really well on $1.25, like Caterpillar, but these stocks really $20.25. So what I did was, I didn't know on this day if that was going to be a buy or a sell print, and I normally don't know, but I know to look at the levels, and if the stock trades above it, as you can see, let's see, 945, up, fell below it, then pulled up. All right, now the best time to enter is going to be 9:45. So you can see the stock already gapped up, pulled down to the 25. I was watching to see if it was going to pull to where the print was, $43.21, right? So it came down, wasn't sure if it was going to break up or down. It broke down a little bit below it and then pulled up through the 25. That told me that this was a good trade to go long. It was strong. It formed a V right here. If you could see, let me just draw it. You want to always buy on the way up. And you can see it went, where'd it go? Is that a coincidence? 43.50. There's your 20 cents on the day trade. Now you can see here, actually I think I mapped out my trades on this. See, there we go. Buying on the way up, and there's the V. Now later on in the day, guess what? It broke the 25. In fact, it broke the 20. Actually, before that happened, it bounced again off the 25. There are actually two opportunities to buy the stock, from the 25 and sell it to 50. Now, if you're quick, you could catch both of them, but don't get upset if you're not. I miss trades all the day. Every day I miss trades, so don't get upset if you miss it. But the quick day traders could have actually taken this trade twice. Buy it, sell it, buy it, sell it. Now, move down, could not hold it, short it. Here's your stop loss if it breaks above it, and there's your 20 cents on the short side. So there was 3 trades on this one stock based on the big prints. So there's 20, 40, 60 cents could have been made just on that one stock print that we saw in the morning. Now here's one that we saw recently. Remember this one? AT&T. Who called this one out? Lori's asking me, why did I use the 20 cents? That is such a great question, Lori. Instead of the 25? Well, where was the print, Lori? Remember where the print was? 21. So I'm always going to be bearish below the print and bullish above the print. So that's why I wanted it to break where the print was. I wanted to make sure that there wasn't anybody buying that stock again at the 21 level. Jeff or Alan called it. Somebody called it good. Or M maybe. I don't know. Somebody called, and guess what? I think it was during my morning meeting when I snapped the picture of it. No, maybe not. Anyway, 4.5 million print on AT&T. Marek is asking me, do I keep the chart on the screen not to miss the moment? Well, of course. Yeah, I keep the chart. Time and sales and the chart when I'm watching the levels. Now, normally, Marek, we get a shot of, I want to say about 6 or 7 of those great prints every morning. Sometimes we get more. So those are the guys that I'm watching for the day. I don't care about any other stocks going on. I want to trade where the big prints are in the morning. Like I said, it's finding gold. I don't have to guess. I know this stock is going to most likely move and move really well. So here's 4.5 million, and it's close to the 35 level. So I get excited. How many charts do I have on the screen simultaneously? Well, I have 2 monitors on this computer. So 1, 2, 3, 4, 5, 6, 7. And then I have my laptop for the chat room, and I keep some charts over there. I mean, as many screens as you have, or as many as you can watch, Marek. Now, don't expect to watch 10 stocks when you first start. 1, 2 is great. You'll find that you're going to get eye training. Okay, every day you do this, your eyes are going to get stronger, and you'll be able to watch more and more at one time, especially if you map your trades out in the morning. You don't have to think there's resistance, where's support when the stock is moving. You already know, and draw a line there. All right, if you forget, it's going to be right there. And don't get greedy. When it gets to your target, I want you to get out. You can always get back in again. So how do we trade this print? Well, this trade's amazing off the 25-cent increments. And I drew it here, 36.25. We have the 50, and then we have 75 right up here. So here's the morning. The stock came down. It never went below where the print was. The print was right over here. See this big bar? Volume bar? This was the print. I waited to see if it was going to come down and test 35 because obviously I'd like to get in on the way up there or short it if it fell below 35 because I didn't know if it was a buy print in the morning. But instead, it gapped up, it pulled back to 35.15, and I don't like to buy in the middle of a range because you get shaken. Instead, I waited for it to test the 25 level. It pulled up above it. Now, you could have got in right here, but I'm going to tell you, a lot of times you get in here, it goes up a little bit, right, 5 or 6 cents, and then comes back down to 35.25 and retests it. I want you to put your stop loss right over here. Or you can wait for the retest and buy it on the way up. Sometimes I buy half a position over here and half a position over here. And then I sell it all if it breaks. This case, look what it did. Went up, pulled back, went up, hit my target, I sold it. It went above it, which it does a lot of times, and then it went below it. When it goes above it again, there's your V, and I'll draw that. Okay, there's your V. I want you to buy it on the way up again. Here's your trade at 35.50, and there's your 20 cents off the major level quick. Then it gets kind of shaky all over the place. And then you know after 11 o'clock, it's just not a good time to enter. After 11, went sideways. I was looking to possibly get in it again at 35.75, but never went there. So there really was no trade on it. I don't like the short stocks that are strong, but those were your great trades. So there was two really great trades off that print. Let's go to the next. United Airlines, UAL, big print. Now, the airlines, the Dow Jones Transportation Average has been super duper strong. It's led this rally up. And now you can see United Airlines, of course, with it. Ride the A train, it's broken. So here's a big print, 32.16. How can we trade this stock today? Now, UAL trades really well off the 50-cent increments and the 25. Now, if it trades off the 50, it always trades well off the 25-cent increments. So you can enter on the next level up if it breaks above 25. You don't ever want to enter in the middle. If you don't know if it's a buy or a sell, you can get shaken. Because if you enter at 32.17, let's just say you do that. You want to enter above the print, right? Resistance is at 25. So you're going to go make 10 cents on it. You know, if it pops to 25, resist $32.25 resistance, your risk is big and your reward is small. And I never take that trade. You always want your reward to be at least 20 cents, especially on a $32 stock. Now, stock that's 10, yes, you're looking to make 10 cents, but you're going to trade bigger size. So let's see what this stock did. Ah, look at this. Obviously, it was a buy. So here's where you could enter. I drew lines on the 25-cent increments. Now notice, I'm on a this is actually a 1-minute chart. Normally, I'm on a 5-minute chart, but I put this on a 1-minute chart so you could really see how the stock trades. So it went up to 32.25 right off the bat. It was before the market opened, right? Came down, and didn't even come down. The next candle, it stayed there and moved up to 32.50, pulled back right here. Could buy it 32.50 up to 32.75. Pulled back up through 32.75 to 33. Went up now. Let's see. I don't think it. What time of the day is this? Yeah. This really moved a lot pre-market. So if you're not a trader that trades in the pre-market, you couldn't take advantage of these big movements. But when you see a big print like that, and you are a master trader, I want to say, you know what you're doing pre-market. You know how to do limit orders. I don't want anybody new attempting to do this because you can really get hurt a lot. But if you know what you're doing, how to put your limit orders, you could have really taken advantage of this big movement up. But even if you didn't, you can see it pulled up to 33.25, pulled back down to 33, pulled back up to the 25 level again. Definitely had some really great trades. But why am I showing you this? Because I want you to see how these stocks trade level to level. And I want you to get confidence in trading around the levels. Here's another one we just saw. ASML, ASML. Big prints. $81.31. 400,000, 400,000. Now I'll tell you why I like this. Look at the chart. This is the day chart, right? And this is the 8. Look how it rode the A train all the way up. Look at the selling volume that came in here the past 2 days before it. 9.2 million each day. You see what the normal volume is on this stock? Peanuts. This is telling you that somebody that bought down here, most likely, or even below, is selling everything up here without moving the stock down either. Look at that. Now, when I come in the morning and I see this, well, you know what? Did it even trade there the day before? It didn't even trade there the day before. I don't know where this sell print came from, but it doesn't matter. This is telling me that somebody is selling a lot. And the nearest support level is $81.25, right, based on the 25-cent increments. And you can see it's close to that. So that's why I really liked that print. And look what the stock did. There was the print. Here's the 81.25 level. If you shorted this stock here, came down, the 81 level you could have gotten in on the way down. So many levels you could have got into this trade even the next day. And look how great it trades on the 25-cent increments. Here's the 50, right? Came down to it, bounced up, broke down through it, came up, retested it over here, pulled back down. Why? Why do these stocks trade along these increments like this? Because we're trading against computers. And computers are the ones giving us the increments. Let's see some more prints. Want to see some more? I got a lot to show you guys because I want you to gain confidence in this. Now, how do we know if, don't you love them, Ricky? I know. Nobody else teaches this, by the way. At least I haven't met anybody. Let's see some more prints. It's kind of our little secret here at CTU. Let's see more prints. How do we know if we should swing them longer term or not? That's the big question, right? Because I'm a swing trader also. How many of you swing trade and day trade? Both. I know some people like to do 1, 2. Oh, Lee does. See, I know there's a lot of swingers in the room, especially the girls. The girls like to swing. Sean likes to swing with the girls. Look, how do we know? It's all about the 8 EMA. That's what tells me. Okay, let's look at these charts. Well, you're going to be a bigger swinger, Paul, after you take this. Look at this. Here's one example of EXC. We all know this. If you've been in the chat room, you know the stock. Big print, 1 million shares, 8:40 in the morning, ATTN, $31.34. got excited. Said, wow, what is this? Okay, how do you trade it? I'm bullish over it. I'm bearish below it. It's as easy as that. Now, EXC went up. Now, let's just go back for a second. You know what? It was above the 8 on this chart. I know it's a little hard to see. It's a little small. But it was on the day chart above the 8. Okay. EXC went up after those prints. Why did I swing the stock overnight? Because it was above the 8. I saw big money come in. It wasn't up here. It was down here, close to it. So I knew this stock had room to go. Most likely going to test that 200 moving average. They like to do that. When you see big prints at the bottom, they're poised and above the 8 on good volume. And right here, see these volume spikes too? Definitely, and here, big volume spike. Money's coming into the stock. And this wasn't the first day we saw these prints. We saw prints a little while before that. So when I saw more buy prints come in, I got excited. Look what this stock did. This was back then. It popped, and look, poised to hit that 200. Let's see what it did over the next 2 months. Here's where that original big print was for 1 million shares. You could have rode this all the way up on the 8. Now, Pen in the chat room, that's exactly what she did. I'm really proud of her because I'm going to tell you, I got out over here when it hit the 200. But this girl rode the 8 train all the way up, and I'm so happy to see that. And I did take a couple trades after that, but she really had, I want to say it was almost the perfect trade. And look, how do you know when to exit? It broke the 8, it closed below the 8, right? And that's when you want to get out. The next stock I'm going to show you, oh, Ricky made 300% ROI on the options. You know what, Ricky? She's the option queen. I'm so happy to hear that. It was one of the best trades, right? Right, that's right, Lee. When it closes below the 8, you get out. And if it goes above it after that, Lee, you can get back in again. Because sometimes they'll shake you, but most of the time, you're happy you got out. And it was the best trade because of the prints, because of the 8, the volume, the uptrend. I mean, that's it. That's all you need to know. You don't need stochastics and OBV and MACD and all that other stuff. The next stock I'm going to show you, CHL, looks a little bit different. It's been on a downtrend, and it hasn't popped above or closed above the 8 EMA, so it's still bearish on the daily chart. But I happen to see some big prints, and I love the pre-market prints. However, until it breaks above the 8 on the day chart, I'm not going to hold it long. It's just going to be a day trade or possibly one overnight. And I'm going to exit the next morning. Now look at this. On March 20th, here was a 500,000 share print on CHL. And you can see the day chart, right? It's bearish. But looks like somebody's stopping and either covering their short or possibly maybe they're starting a long-term trade. I don't know that. But what I do know is this stock is probably going to have a pop up to the 8. Remember I said when it moves far away from the 8, it likes to go back up, and I want to say kiss it because that's exactly what it does, and then pull away. So let's see what happens to that. See, the next day, it pops to 53 resistance, which is where I got out. Look, can it pop to 53.23? Yes, but I'm going to tell you the last 8th is what I always call it, is the hardest to make. I don't want you guys to try to peg the bottom. I don't want you to try to peg the top. I want you to get the meat of the trade, the high probability, knowing that 53 is resistance. The stock is going to most likely go to 53, and then it could pull all the way back to 52.50 before it pulls up again to 53.23. And I don't want you to get greedy trying to make that 23 cents. get out and be happy. All right? Don't try to peg it. Look what happened. This is where that big print was. I went back. It did end up going up and touching it, and the sellers came in, look at that wick, and pulled it down, and then look what happened here. This is why I don't hold this stock as a long-term trade. Because look what happened. You would have got wiped out. And I don't want you thinking, well, there was a big print the other day. Absolutely not. That's a short cover print, what we saw. Pops up a little bit. The sellers come back in again and shorted. Probably the same guy that bought it here shorted it again right here. Mondelez, we know this stock. MDLZ, that's what we call it, Mondelez. If you've seen Seinfeld, you know exactly what I'm talking about. If not, don't worry. March 20th, big prints, over 1 million shares. $28.30. Now, I don't know what this is. It's down 4 cents, but I know that I'm going to use this as a marker. And look what happened. The stock really moved up that day all the way to 30. This is when it happened right here. Look what the stock did the next day. Now, do you think somebody knew something? We saw the print over here. By the way, let's go back. See this? This is March 20th. Big print, 9:20 in the morning. Ah, it happened over here. Sorry, see, March 20th. Look what happened 2 days later. Insider trading. So let me tell you, watch the big prints. Somebody knew, actually earnings happened, I believe. Somebody knew something. Told their friend, their sister's uncle, girlfriend's brother's son, niece's nephew, and they bought 1 million shares without being noticed. It wasn't me. I made a lot of money on it. All right, so let's check out CTL, March 20th. Big prints, pre-market. Look at that, 6 million shares at $34.25. Now, for those of you that were at the Plainview Library, I took this trade. Remember this trade that day? I invited you guys back. Lee was there. I invited you back to watch me trade. Penn, I believe, called this out. Somebody called it out. And I got so excited because I said, wow, this is exactly what I want you guys to see, right? $34.25. I think I jumped into this trade at like 9:31 or so forth. Very early. Never went below it and made a quick 50 cents or so on that day trade. It was phenomenal. And not even that. It's a great long-term swing because right now it's closing above the 8. I know it's small, but it's closing above the 8 strong, and we saw huge money come into the stock. Here's where the prints were that day, March 20th, and look, it never closed below the 20 until right here, and this is where you want to get out. Now, did it go up a little bit above? Yeah, but look what happened eventually. And, you know, remember what I told you. We're at an amusement park, and here's the top of the roller coaster ride. Okay, this is where you feel like your stomach is going to go in through your mouth and we come crashing down. But great swing, great day trade, great swing trade. I know a lot of the traders took this in the chat room, so good job on that one. Now, big prints at major levels are the best trades to take because your risk is going to be the lowest and your reward is going to be the highest. Now, take a look at the next slide of Activision, ATVI. Big prints at 14, right here. Again, ATTN. 4 million shares. Now, I don't know if this is a buy or a sell because, quite frankly, it's had a big run-up, right? And it broke down through the 8. So I'm thinking, I don't know, I'm going to have to just watch the 14 level. I can't tell at this point. And it's okay. You don't need to tell. And look what happened. It held the 14 level that day. I was ready to short it, but it never broke 14. So then I thought, perhaps that was a buy print then. You know what? Maybe the stock is going to take another run up. Now look at this chart. It has a gap here, right? Everybody wants to get that gap filled. And I thought, even personally, I thought, you know what? I know we should not think, but this stock could be poised to at least come down here. I already mapped out in my head, if it breaks 14, I'm going to short it, and I'm going to cover right here at 13. That is the best trade to take. You never want to go for the gap fill, because what they're going to do is, let me draw a line. You always want to get out before the gap at the strongest level, which is 13, because they're going to take it down, and then they're going to bounce it up, and you're going to get creamed. So don't get greedy. Always get out here the first time. The second time they take it down, the odds are it may break through. Then you could try to go for a short, but always the first time. So anyway, but the fact is, it never broke 14. I want you to trust your levels. Don't think, I'm going to short it here and get a better mark. Okay? Wait for it to break 14, because look what happened. It moved higher. Look at this, the next few days, and that's when I went long. This day, right here. It made a higher high, a higher low, volume picked up, and I said, this is not breaking 14. The buyers, and it looks like it looks like a rounded bottom here, and it looks poised to break up. Look how it traded over the next few months. I just love this. Look at this. Came down. These were the first prints we saw. Popped up, came down to the 14 level, never closed below, popped up, came down for the third time, popped up. Isn't that amazing? So I watch a stock for a few days after a big print. Absolutely, Lori. I put it into my market watch ticker. Yep. And I watch it, because not even that. Sometimes we see a big print one day, the next day we see more prints. Consecutive prints are only going to make your probability of your trade stronger. I didn't wait for it to close above the 80 MA. You know what, Mike? I didn't. I broke my rule. And I'm going to tell you, because it didn't break the 14, it closed really strong. Normally, Mike, you're right. And I'm glad you noticed that, because it means you're paying attention. I break my rules. There's one, can anybody tell, Mike, my one condition, though, of when I break my rules? Big prints, yes. But ECN refreshing. And I'm going to tell you, not only did I see that big print, Mike, that day, I saw it refreshing on the ECN book to confirm it. So I knew there was somebody, some computer, there was a buy program on this stock every time it came down here to test it. And prints. But I'm going to tell you, the odds are better when it closes above it. Now, there are some times a stock will close strong on really good volume, but come up against resistance. Like, say it comes up to, let me just say, 1450, let's just say. Let's just say it closed up strong at the 1450 level. Couldn't break above it, because today there's going to be a lot of sellers there. But what the swing trader in me knows that they like to gap stocks above those big levels the next day. So if a stock closes strong at a major level, holding up there, I'm going to tell you, you can swing that stock overnight, but it's got to close strong. It means the buyers keep pushing it, pushing it, pushing it. But if it goes up to 1450 and retraces all the way down to $14.12, do not take that stock long overnight. Wait the next day for it to break above 1450 again. What does smart money selling at the top look like? It's a little bit blurry. I apologize for that. But here's a big print on EWI, 223,000 shares at $59.95. And look at the day chart here. Here's where the prints were. So smart money is not going to sell here. Smart money is going to sell when the stock comes up and starts to get near resistance. Resistance is 60, right? Major resistance. The major levels on this chart, $1.25 increments, which you can see, 61.25, 60. Look what happened here. I even drew a line down just to show you. But that sell print happened right here, and this stock dropped. That's what it looks like when big money sells at the top. This was a nice day. I'll never forget this. Did you remember this day when we found gold in the morning? It was really gold. We found it. GLD, the Spider Gold Trust. Big print at 8:04 in the morning. And you can see right above the 8, 140.95, 400,000 shares, and right near the 141 level. So when I see a big print like that, I get excited because it's really easy to put a stop loss and so forth. And look what just happened. How do you tell if it's the buyer or seller who is the smart money? Well, the smart money, Keith, is always going to sell at resistance after a stock has popped up, and the smart money is always going to sell at support after a stock has come down and found support. That's where we look to see the big print. If there's no big print when a stock is crashing, you don't want to get involved in that. You don't want to go long. And I'm going to show you an example of what it looks like. At support, yes, Mike. Buy at support, sell at resistance. Exactly. So here's where that print was. And this is 8 o'clock in the morning, right? So 9:30. Look at this level. 140.150. When I saw this stock went up and hit one, it kept bouncing off it. I kept seeing refreshing on the ECN book at this level. Kept bouncing off. I knew to take a long trade in gold. Now, I'm not going to buy GLD because it's expensive. It's $140. But there's tons of other gold stocks to trade that day. Yamana, we love to trade. You find the right level. But when you see the actual Spider Fund doing that, you know the big money's coming in. Now we have 5 more minutes. I'm just going to go through as many slides as I can, and then we'll take a break. PTM, big print, Tata Motors. Now some of you probably remember all these big prints in the chat room. Here's a big print, 400,000 pre-market. And look, it's right at the major level. And I love that. Here's the day chart, and here's the 50 level, and there's the big print. So I'm going, all right, easy. Go long above it, go short below it. We don't have to know, right? Look what happens. That was a big sell print because, look, 9:30 came. The stock never went above the print. In fact, it came down, popped up to the 40, came down, and was a great short. You never would have got stopped out. All right, this last one, and then we're going to take a break because I love this. This is going to show you refreshing prints. Pretty much everything that I've been teaching you this morning is going to put it all together. Pfizer came out with earnings. Got crushed in the morning. It got crushed. Can we see the ECN, the big prints? I'm going to show you how you can see it in your time and sales window as well. Yeah, the ECN shows the orders. It doesn't have a time and sale, so I like to watch it alongside of it. But you could actually see ARCA. See that? That's refreshing. ARCA, when you see 100, and it keeps adding and adding at the same level, ARCA, all right, that's refreshing. But here we go. Pfizer came out with earnings, and the major level is 29. Oh, sorry, I put 19 here. Let me just change that. There might be a couple typos, but let me go back. Okay, 29. I spotted refreshing, but I was looking for prints because it's not just about refreshing. I want to see prints come in. Is this the bottom? Right? It started to move up off of the 29 level, and you can see in the time and sales these yellow. I said, okay, here we go. Here's, it could be short covering, not sure yet, right? But it's starting to form a base at 29. It continued to move up, holding the 29 level. Right? You can see in the time and sales, went to 29.04, 05. It's just 7:30 in the morning. And I'm snapping a lot of pictures. Now, 29.06, 07, still holding it, but we have yet to see big prints, right? But yet I saw that refreshing going on in the ECN book. So I'm like, is it a late print? I don't know. It came back down to test the 29, which it does many times. Is it going to hold it? Let's see. Yep, it's holding for now. And you can see the prints. See these big prints on the bid? 10,600. Here's in between. Here's 7,200 in between. So buyers on the bid, they're holding it up. You can see the ARCA book right here. You can see the NASDAQ ECN book right here. And I'm watching them refresh. And let's see if you can see. See there's 100 here? 100. 100. Now watch the next slide. 1,400, 300. Back to 100, right? 100. And you can see it refreshing here. 100, 100, 100. They don't want to show how many shares they're buying there. Okay, but there's a secret buyer that just wants to buy it up. And look what happened. ARCA changed to 1,300 right here. So he's adding. And you see the big prints, 55, 9,000, 97. It's holding. Let's keep watching. And it's holding. Now I'm snapping away because I want you to pretty much see every tick of this trade. And look at that. Pulls up. So all that refreshing, the buyer hung in it, was buying it up here. And it's starting to move up. But have we really seen a big print yet? No. Sometimes we don't until later. Could be after the close. And I'll talk to you more about that. But Pfizer hit the 8 on the 5-minute chart. So I'm thinking, maybe it'll pull back here. Haven't seen a big print. Look what it did next. Pulled all the way up. Now, this 2962 print, let's see, right here, 60 print, you see this? 100 shares. This didn't just happen here. This happened over here. It's a late print that formed that spike. So it really climbed up to $29.25, which is a resistance level. Pfizer trades on the 20s and the 25s. So it popped to 25. So ignore that. When you see a spike like that and 100 shares, all right, that is just a late print. Look at this right here. See these prints at 8:02? That is a late dark pull print that we didn't see over here, because if we saw these prints, okay, back here, guess what? I would have bought it, Jake would have bought it, Mike would have bought it, Dennis would have bought it, Sean would have bought it. We all would have bought it. And guess what? That guy never would have got done. The stock would have popped up. So it's so sneaky the way they do that. But that's just a small one. Let's see. More late prints at Pfizer. And I'm going to end in 2 minutes as soon as I'm done with this. Look at these prints. Snuck in here between 29.32. This didn't just happen now. These are late prints. That's what moved the stock up. How long after the trade do the late prints? It could be 5 minutes. It could be a half an hour. It could be 5 hours. It could be tomorrow. And I'm going to talk more about the dark pool when we come back. But look at this. See this? This is an 847. Look at this big print, 53,000. Where is this print from, Lori? Yesterday. Okay? They didn't show it till now. Somebody shorted it and bought it back here. Amazing, right? Now, my 20-cent trade that day, with all that stuff going on, all right, just watching it, I knew there was a buyer. I knew it was, even though it was down on the day. I don't bottom fish. But when you see prints like that, you see refreshing on the bid like that, I'm going to give you permission to buy it. But I was waiting for it to break the 29.60 level. It came up there at 8 o'clock, pulled back. It came up there at 9 o'clock, it pulled back. Look at 9.40, 9.45. Perfect time to trade. Broke through the 60. Look how fast. I made 20 cents. I got in and out. And that was definitely a great trade. But I had the confidence to take this because I was watching it all morning long. And when we come back, I'm going to go over some more trades that we recently did. So have a quick lunch, and I'll meet you back here at 1 o'clock. All right, you guys?